Back to the markets now, where domestic crude prices ended higher for the second session in a row, but not by much. West Texas Intermediate up 14 cents a barrel. It settled at $48.79. But international Brent drifted lower. It is now below $51 a barrel. And the overall trend in lower oil prices is being felt by a number of businesses besides energy companies. Morgan Brennan has more on who else is getting squeezed.
The collapse in oil prices is beginning to take a toll on other industries. United States Steel Corporation is temporarily idling 2 factories and laying off roughly 750 workers, a direct result of crude's dramatic plunge. Supplying tubes and pipes to oil and gas drillers is a key market for steelmakers, and up until now has been a bright spot for the hard-hit industry. But with energy companies expected to slash capital spending by as much as 20% this year, that means less steel.
U.S. direct steel consumption into the energy market is about 10% of the market, but when you include energy-related infrastructure, that number bumps up to about 15%. So the weaker growth in oil and gas is really driving down the growth rates in U.S. steel consumption this year.
Factor in a stronger dollar and an oversupply expected to get worse, and 2015 doesn't look good for the commodity. But steel isn't alone. Other industrial companies are also beginning to feel oil's effects. General Electric recently said it expects revenue from its oil and gas segment to fall this year. GE's business, which makes compressors and drilling equipment, accounted for 12% of 2013's overall sales, with billions of dollars invested to expand that. And after a year of stellar growth, experts are watching railroad operators as well.
As we see the potential for these lower crude prices to persist for a period of time in 2015, you could see some production drops. You could see some of the volumes on the crude or the sand side come down.
However, Weatherby does note that oil and related fracking supplies make up only 1/10 of overall rail volumes. Analysts warn that Caterpillar, which is already laying off workers due to weakness in mining, could also come under pressure from its exposure to oil and gas. And Archer Daniels Midland may feel the pinch of cheaper ethanol, which is falling as export demand wanes. But for every company hurt by oil's downturn, many others are benefiting. Airline carriers realizing cheaper fuel costs, and retailers that could, at least in theory, see a boost as consumers spend more on things other than gasoline. For Nightly Business Report, I'm Morgan Brennan.